Hello and welcome to episode 57 of the Craving Crypto podcast. In today's episode, we're going to be talking about 5 tips for handling panic. So let's get right into this. What is up? Happy Friday, everybody. Today we are going into some specifics about the total market cap, going over our technical analysis as always, going over the top mover for the day, which looks to be Factum, and we are also going to be going over 5 tips, my top 5 tips for handling panic. So we'll start with the total market cap. Not much has changed since the episode that we made previously. We're watching this lower support level, the 176 billion target that was met, our bearish target that got hit when we saw that downside trigger and all of our support levels failed. So we are watching this support level again pretty closely here, this green level. And if we can get above this resistance level, then that will be positive for the trend and for the total market cap. So right now it's all about just waiting for it to get back above this medium line at about 185 and then really above this resistance line at 193, getting back up into a positive trend like I was saying, potentially making some higher highs and maybe getting above some of these new resistance areas. So that's kind of what we're watching. If this lower support level starts to fail, our option 2 and our other kind of bearish count would be that we go for 146 billion and test this lower support level right here. So things haven't changed a ton, but we are watching those levels really closely and expecting it to see some type of reaction back up into this medium line of this lower channel that we've started to create. Now, like I said, when we're looking at the total market cap on coinmarketcap.com, we see quite a few coins in the red. Overall, we see red, but we do see some oddball green coins right here. Basic Attention Token recovering with some 7% upside. We have 7% up on WAX, 7% on Mona. We have 7% on ODEM. We have 22% up on Factum, which is, like I said, the top mover for the day. So we'll get into the technical analysis on Factum. You guys, this coin is in a huge falling wedge pattern that we've seen right here. Just a giant falling wedge pattern. And it's starting to see some increasing volume and starting to see some buying action coming into play here. This one did do a complete market cycle all the way from really back in 2016 when this coin was added to Poloniex and it started trading on that major exchange in the early crypto days. Decided to go ahead and do a full Elliott wave cycle with the 1, 2, 3, 4, 5, and I would count this as a big A, B, and that falling wedge kind of popped up inside of that C wave, and now we're starting to get some volume coming back in. If this volume picks up significantly, this could be one to watch here for Factum as well. Like I said, it's all about these trends. If they start developing positive trends, making higher highs and higher lows, you buy a dip in one of those positive trends, and that's how you can kind of find a setup when they start to curl, when they really start to round out after these huge sell-offs, because you're waiting for that volume to really come back into the market. So that's kind of my thoughts overall. The total volume, Bitcoin dominance did drop. During that capitulation period, Bitcoin was the one that seemed to make the new low. So Bitcoin dominance is kind of something I'm watching closely here. If this starts to drop a lot, that would be good for both showing that a bull market could be coming around and that altcoins are likely to pop off. So again, you guys, Ripple is one of those coins that is showing its market cycle and showing some strength with that volume coming back in at these previous all-time lows or previous lows that it's seen in the past and all that volume. So we're watching some of these other setups, and if they start to develop those uptrends, they're gonna pick Bitcoin up with it too. Especially if Bitcoin is dropping off in dominance, and some of the altcoins might even carry it. So there's quite a few things kind of going on here. The 24-hour volume is around 15 billion, which is pretty average. I would watch for the beginning of a bull market, I would be looking for something at like 32 billion in 24-hour volume, or maybe even 45. That would be a lot coming back in, a lot of money, a lot of hype coming back into cryptocurrency quickly. So that's kind of a volume level to be watching and a number to look for to see strength coming back into the overall market. Okay, now let's talk about the lesson for the day, which is top 5 things for handling panic. You guys, some of this stuff I've talked about in the past. Refreshers are always good. This is a time of a lot of panic, so I figured this would be a great time to be going over some of these very useful tools that I have gathered and learned over the years now. The very first thing, and the absolutely most important thing, or one of the most important, these are all pretty equal, but do not overinvest, you guys. Overinvesting, putting too much money in something, or putting too much money in a single trade, or playing with money that you can't afford to lose, or going into tons of debt that you can't calculate properly to come back from, that you don't know how to have a solid business plan to make the money back to pay that debt off. If you do not know how to create revenue and generate like sales, or create revenue through trading, whatever your method is, never pull money out, never leverage yourself unless you know how to pay it back so that you can continue to stay in the green. If you're going to leverage yourself, it should only be in a time where you have a solid plan to do so. So you guys, do not overinvest, do not take out huge loans or take out money that you can't afford to lose. And if you do take out loans for your businesses or crypto, you have to have a solid plan that you can repeat and know for a fact that you'll be able to come back and pay back with that investment. So that's a tip right there, number 1. Number 2 is learn how to place stop loss orders. This is really important, especially this goes kind of along with the risk management stuff, but if you do not know how to place a stop loss order on Binance or on whatever exchange that you're using, then you're just going to watch your coins drop and drop and drop. And unless you're just long-term investing, which is also totally cool, you guys, you know, you have to work with your trading plans. But if you don't know how to use a stop loss order at all and you're looking to do some of this swing trading stuff, you should definitely learn how to use one. I have a video on how to do that. You guys just look up high altitude investing, how to set a stop loss on Binance. You can use the same methods on most of the common exchanges. Number 3 is apply risk management. So this is what I always talk about when you keep large percentages in more stable coins, such as Bitcoin or US dollar, or there's the DAI, or True USD, or Gemini dollar. There's lots of alternatives at this point, but places that are stable that you can store, and it gives you that short-term stability so that when you're accumulating, you can go into some of the, take some risk, take positions, and then when you make your money, you can go back into that stability and continue to grow and compound. So you do need to have proper risk management. A lot of those stable assets, high percentages. I usually recommend around 30% in the dollar and at least 40% in Bitcoin to keep your account stable. And you could even have more than that if you want to be really safe. Number 4 is do not have an attachment to the market. I've talked about this in the past when I say surrender to the markets, or don't care about what direction it goes, or having trading plans for both directions, aka a stop loss if you're doing swing trading, and a target. And the reason for that is because the market can go in both ways. You're working with probability here. You're not working with 100% certainty, but you are working with probability. So you know that when you take the trade, you have a certain percentage chance that it's going to go in your favor, and you just only take trades if you know that you can get a win rate that works with your risks or rewards so that you're consistently profitable. So you can never have an attachment to the market. This goes along with not overinvesting, takes a lot off the table when you're not overinvested to not have an attachment. And then when you make your trading plans, it's a lot easier as well to understand. It can go both ways like that. And then number 5, this one is really important. I like to teach this one a lot because I like to accumulate or play bigger cycles, and that is focus on the big picture moves. You guys, aside from the swing trading that I do, when I do my accumulation, I'm focusing on playing the super cycles. So like that means that Elliott wave cycle that I was showing earlier here on Factum, all the way from 2016 till today, these big giant swings that take a long time to form. I like to accumulate those cycles because they have really good risk to reward ratios. You can buy after they've retraced up to 80% down from their peaks, and you're just able to accumulate at these really low percentages or buy at these really low levels, and then once they develop their big picture trends and return to those big picture trends, you make a lot of money riding it for the next few years to come. So I love to play those super cycles, playing those really big swings aside from the shorter term swing trades that I do. And that's why I love focusing on the big picture, because if you do focus on the big picture, then you're like, okay, you know, I'm just gonna buy slowly like a turtle, think rather like a turtle, think long term rather than the hare. I've said multiple times that that applies in trading as well. If you just like accumulate little bits, you're like, ooh, it dropped more, I'm gonna buy more. And it changes your perspective completely. Rather from putting so much pressure on yourself to exactly nail the bottom, you're gonna play it very smart over a long period of time, accumulate little bits, buy it, and not stress yourself out, play the super cycles. It just helps a lot so that you don't have so much attachment to the market, and so that when it's dropping, you see opportunity rather than fear. Because as a trader, you want to think as an opportunist when people are fearful, and an opportunist when people are greedy to take your profits. So you guys, those are my 5 tips for handling panic, my top 5 tips. You guys can always check out the analysis in the description here in the document that we have, along with all the links and the referral links, so such as Binance, chart for the day, Coinigy, BitMEX, my Bitcoin address. If you like what I'm doing, you can always donate, and the VIP course if you want to leapfrog your learning and do the signals as well. Thank you so much for tuning in today's episode. I hope that you learned something. If you have any questions at all, please feel free to drop them in the box below. Hit that like button, hit that subscribe button, and I will see you guys in the next episode. As always, stay profitable out there. Oh, there's, what kind is that? Is that a quail? No. That was quails. Quails and doves. I know, I love this morning tea. It's amazing, it's so good for your lungs and your airways. Natural herbal remedies.